Welcome back to the channel, everyone. Today I want to talk about the possibility of a MOASS before Christmas. Now, you may already know, I don't really like setting specific dates and times for the squeeze, so today I want to talk about the key catalysts and how everything seems to be falling into place at the moment, like the SEC putting in new regulations to reveal shorts. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, somebody commented on Dr. Marco Meltzer's LinkedIn saying, is there going to be a mother of all short squeezes before Christmas? And Marco replied saying yes. Now, while I would absolutely love to see the mother of all short squeezes happening before Christmas, I'm not putting my entire life on that, and I don't want to give anyone a specific date and time, because otherwise it can upset people if it doesn't happen. So today I want to talk more about exactly what things seem to be falling into place. Firstly, we've got a tweet from Rizzo saying, breaking news, the Fed is kicking down doors. First, Citadel restricted clients' withdrawals, and now Anchorage Capital manages $7.4 billion in assets, and they've suspended clients' ability to get their money back. And he says this could be the start of the liquidations before the market crash. Guys, right now, if you sign up to BlockFi using my link in the description below, you can currently get up to $250 in free Bitcoin just for signing up and making your first deposit. With BlockFi, instead of just buying Bitcoin and holding the same amount forever, you can actually earn interest on those deposits and accumulate more and more and more Bitcoin, up to 9% per year. BlockFi also offer a rewards credit card where you can get up to 3.5% cash back on your purchases, also paid in cryptocurrency, so again, you can continue earning more Bitcoin. And when you've generated a significant profit on your investment, instead of having to sell off your cryptocurrency and potentially missing out on the next run up, you can take out a crypto-backed loan. Therefore, you can get cash to pay off those bills or buy something new, but you don't have to sell off your crypto. If we go to that post in the Wall Street Journal, it says Anchorage Capital is closing a $7.4 billion flagship hedge fund. In a letter to investors, it reports the closing of Anchorage Capital Partners and the eventual return of money to clients. Anchorage Capital Group, one of the biggest hedge fund investors in distressed debt, is closing its flagship fund after 18 years and returning the $7.4 billion it manages to clients, citing a market environment in which cheap money has helped keep stock and bond prices elevated and therefore no good to short, while suppressing corporate defaults. The credit fund, Anchorage Capital Partners, is suspending clients' ability to get their money back as it's wound down. The New York firm told clients in a letter on Wednesday that was viewed by the Wall Street Journal. Anchorage didn't even give a date by which clients would receive all of their money back from the fund, which holds sizable positions in companies including MGM Holdings and clothing seller J.Crew Group. But an interesting position they did also hold was AMC puts. Anchorage Capital Advisors, the hedge fund that just went bankrupt, sold all of their AMC put options just before they did. There was 4 million put option contracts sold. They knew AMC had bottomed out and was going up from here. That's why funds sell puts, otherwise they let them ride downwards further. Now, I think part of the reason why they're closing their fund and why many other funds might be closing as well is because the SEC is making moves to force firms like Ortex to reveal their swap positions. Dave Lauer said it's good to see the SEC moving on security-based swaps. New rules would require disclosure when a position exceeds 5% of shares or $300 million, including swaps, bonds, credit default swaps, and it would also prohibit market manipulation and insider trading. And funnily enough, he also adds that it's insane that this wasn't already prohibited, of course. This is great because it means total return swaps, which is a financial product used to hold shares in a company in somebody else's name or hold shorts in a company in somebody else's name, will be disclosed. And this means that when funds are hiding their short positions in companies like AMC, they will now have to be disclosed exactly how much they're holding and exactly where it's being held as well. Now, on top of that, we've also got another short hedge fund biting the mud. Tybourne is to shut a $2.8 billion hedge fund on short selling pains. So from a news source, Tybourne Capital Management is to close a $2.8 billion hedge fund and retreat from bearish bets. The Hong Kong-based firm will shift its focus to its long-only and private investment funds, said the people who asked not to be identified because the information is private. People with knowledge of the fund said that the fund lost 10.5% in November alone, making this year's decline to more than 16%. Tybourne is known for taking focused bearish bets on high-growth companies such as Singapore-based online gaming and e-commerce provider Sea Limited. It then also talks about how short sellers have been having a tough year so far because of, for example, the January run-up in GameStop. Overall, it seems like this year is a terrible year for shorters, and it seems like it's just about to be made even worse, as the SEC now want them to disclose a lot more of their positions. Now, as Astro says, given the market instability and uncertainty, and with tapering around the corner, and with funds reporting their deleveraging, he says, I see a huge chance for BlackRock, Vanguard and other funds doing a mass share recall on borrowers, which are shorts. Obviously, if BlackRock did a forced recall of their 40 million AMC shares, it means that shorts would have to cover 40 million short positions and buy back all of those shares. I think especially with those new disclosure rulings potentially coming in, a lot of funds won't want to have such giant short positions on their books anyway, and may also look to cover. Now, as I spoke about in my video earlier, all of this market instability is causing senators to sell off their stocks. Clearly they know something is going to happen just around the corner, but who else knows and is preparing for what's about to happen in terms of the market crash? Well, if we have a look at the activities of the 1%, we can see that Jeff Bezos, Elon Musk and Mark Zuckerberg unloaded $42.9 billion worth of stocks, obviously Amazon, Tesla and Facebook, in December. We're only halfway through the month, and between the three of them they sold off $42.9 billion worth of stocks. And as the poster says, no, this is not usual December activity, this is the 1% front running the crash. Clearly, Jeff, Elon and Mark are trying to get out as much cash as they possibly can before they know that their stocks are about to fall. Now, I also wanted to touch on the Ortex data. Now, I wanted to quickly caveat that Ortex data isn't brilliant for two reasons. A, because it's only the legally reported short interest, and B, this is obviously self-reported, so they don't really necessarily have to tell the truth. But with that out of the way, we can see the estimated short interest percent of free float is nearing those all-time high limits around 20.69%, which is higher than the estimated short interest percentage we saw back in May and back in June. Now, on top of that, the days to cover is also still pretty much heading vertical and is going absolutely parabolic because obviously the volume has been declining and the short positions have been slightly increasing. Now, obviously over the last few days, we have seen the volumes increasing, but that's because the short position has been increasing as well, therefore still causing the days to cover to increase rapidly. Obviously, the days to cover is also at all-time highs, substantially higher than it was back in May, so it looks like we are setting up quite nicely for the next run up, which, as Dr. Marco Meltzer said at the start of the video, could potentially be before Christmas. And finally, I wanted to quickly touch on the reverse repo position, as we've just hit a new all-time high on the reverse repo scale at $1.621 trillion. It wasn't that long ago, back in August and September, when I started covering the reverse repos, where we'd barely even cracked $1 trillion, and now we're definitely on our way towards that $2 trillion mark. All of these figures are currently getting very, very unmanageable, and I think it's only a matter of time before the lid is blown off. Guys, be sure to let me know down in the comments below what you think about the possibility of a MOASS before Christmas, and what you think about the SEC increasing these disclosure regulations. And guys, if you want to stay up to date with my latest stock and crypto picks, or if you just want some help with AMC and GameStop, be sure to check out the Patreon and the private Discord, linked in the description below, and become part of the team. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.